Hi, my name is Ryan McIntyre. I'm the president of Maverix Metals. Maverix is a precious metals royalty and streaming company. We currently have 122 royalties and streams. We expect record revenue in 2021 of approximately $55 million. We have a $700 million market cap and are dual listed on the Toronto and New York stock exchanges under the symbol MMX.
Good to see you again, Ryan. I think we saw Dan recently. Haven't seen you for a while. How has your year been?
The year's been very good, actually. Yeah, I think it's been since July since we last spoke.
Yeah. It's been a while. Been a funny old year in the market, right? Obviously, you guys have been affected by precious metals the equities coming off a bit. How are you reading that? What's the sentiment?
Yeah, it's interesting. I mean, I think most commodities have done quite well this year. Gold has struggled a little bit. I think really just due to the Fed here, in terms of them possibly tapering more aggressively than previously thought. But our view, on the gold price is very strong, and that's obviously the focus of our business, try to get exposure to that front.
Yeah, but it is. Gold price is fantastic, and if you're a producer, you're making money, and you're fine. If it was like this for the next 10 years, you'd be happy, right? But the equities have come off. There's been a sort of disinterest in precious metals across the board, and the US royalty company have not been immune to that either. Again, have you got a sense of what's happening there?
Yeah, I think it's people just taking a look at the different risk categories, I think, in relation to any sort of Fed taper. And obviously, gold equities, whether it's the royalty companies or gold mining stocks, are obviously more sensitive to changes in gold price than gold, obviously. So to me, it makes a lot of sense that, particularly some risk off is happening, particularly on the junior side, I would say, because that's obviously the riskier category. And then you go to the larger producers, and then obviously the royalty companies, and then the gold itself is sort of being the sequence of where I'd call the risk off departments.
Right. So you need to keep telling growth story that, and like you're between 650 and 700 million market cap. You've got 122 royalties and streams. You've got 14 paying royalties, but you've got to keep pushing that growth story in the marketplace. So is 2022 lined up to be a growth story, or is it more a consolidation story?
Yeah, I mean, for Maverix itself, we definitely expect to have higher revenue in 2022 than 2021. And there are a few different things happening there. We obviously made some acquisitions toward the end of 2021 that will obviously be 100% represented next year. We've got a 2% royalty on the Camino Rojo project, which comes on actually this quarter, and that'll add about 6 or 7% for a revenue base as well. Then there's a few expansions as well that already exist in our portfolio. We've got a 4.75% royalty on the Beta Hunt mine, which is undergoing a doubling in terms of underground throughput there. So that'll add over 10% for revenue base. And then you've got the potential expansion at the Hope Bay mine by Agnico Eagle that'll add probably another 6 or 7% over the next couple of years here.
Okay, so you have to set yourself up for this. But and I want to come back on a couple of points in a second, but again, one of the issues you're going to have to deal with is, as well as telling that growth story for next year, which is, as you say, sounds impressive, is the Newmont, Pan American, Kinross major shareholders. You've got a couple of mid-sized institutional guys in there too. 75-80% of this is held by institutions. Retail guys can't get a look in. You need liquidity to kind of drive that price. What are you going to do about it?
Yeah, it's an interesting question because, obviously we've got 3 large holders with Newmont, Pan American, and Kinross owning over 50% of the business. Management itself owns about 8%. So we're obviously fully aligned with everybody. And I think you're absolutely right. I think the biggest question or knock that we have against Maverix is liquidity. We trade about $1.5 million a day between the Toronto and New York Stock Exchange listings. That has improved dramatically over the last several years, but it is still below the threshold, I would say, of a lot of people, just given that float is pretty limited. So I think there are some advantages, obviously, to having great, strong shareholders, but on the other hand, there is certainly a need for additional liquidity there to encourage new investors into the stock for sure.
But where's it going to come from? Because you guys are throwing off cash. You're going to have a better year next year than this year in terms of cash generation revenues. In fact, we'll maybe talk about your third quarter results in a second. you've got three big shareholders who don't need the cash right now, it seems. So there's no kind of chance of more shares coming into the market, and whether you look at it positively or negatively as an overhang is down to you. But you need to give the retail guys access to more shares. Is there something you can do? Is it something you can control, or is it just that we need to just accept that's the makeup of your company?
Yeah, I mean, I would just think that, we're obviously cognizant that that's one of the issues prohibiting new investors from coming into the stock. That being said, we're not going to just do an equity issue to do an equity issue, and certainly not at these prices. That is for sure. But hopefully over time, a couple of things will happen. We've averaged about 3 or 4 deals a year since Maverix has been in existence. And so we hope for that to continue. And, with that, there might be a situation, if it's large enough, where we do an equity deal. But that'll be a great scenario for existing Maverix shareholders, and obviously allows some new shareholders to possibly come onto the register as well. So I think we've got a few options, but it will take a little time for sure.
It'll take a lot of time, but you've also got massive credit facilities in place. So, it needs to be a pretty big deal, and that's rarefied air, and the competition's a little bit stronger up there, I suspect. So do you think that's something that you've got a line of sight to now, or is it a case of as and when?
Yeah, I mean, we're certainly well funded in terms of available capital now. I mean, we have over 160 million available to us. We're net cash positive, obviously, and we continue to generate significant cash every quarter. But on the other hand, we are looking at some pretty large things. And so we'll see how things, progress over the next year or so. But, we look at everything from large to small, and you never really know when the sequence of new transactions is going to come our way. But we certainly want to be prepared, and there could be an opportunity at some point for some type of equity issue in the future.
Right. Okay. So no line of sight yet, but it could happen. And which then asked me the question about, what's the ambition here? Because if I look at the Newmont, Pan American, Kinross, what's their expectation of you? Because this is a big deal for them, because, worst case scenario for them is you go and sell to another big royalty company, right? So that there's some upside there, and it's a relatively easy, quick, simple thing to do, presumably. Or do they want you to go out and make big acquisitions and maybe get some liquidity in this? And because it's in their interest to drive the share price up as well, isn't it?
Yeah, no, exactly. I think for all the deals we've done with the large corporates, so that includes, Pan American, Goldfields, Kinross, and Newmont. I think all 4 of them, I think the primary objective was to sort of daylight value. So they had these, latent royalties in their portfolio already that weren't getting recognized in the market. So that was step 1. But the second part was probably even more so a selling point, because they could have sold those royalties to any other royalty company. But the key differentiator for us is that, we're planning, and we have done, we've basically tried to get a higher multiple along the way as we've increased scale and quality basically over time. And so there is that re-rate factor that you have as a junior royalty company and moving towards sort of a multiple of a senior royalty company, which we've done partway, but we still have a long way to go to get there. And I think, as you point out, if we can't do that and also add some value per share from new acquisitions, I think that is absolutely correct that they'll probably just sell out to a larger player in the space.
Yeah, it's interesting. Well, again, nice problem to have. You've kind of explained some of the organic growth which is going to come through next year and the quantum there. In terms of acquisitions, you're fairly global now. Very well represented in North and South America. You mentioned Beta Hunt there with Karora in Australia. There's a couple of others as well. Are you starting to have to look beyond jurisdictions that you would normally feel comfortable in? Because I know you've got a couple of projects in Africa. Are you finding yourself looking there more and more at the moment?
Yeah, we sort of look at everything, I guess, as a broad comment. And I think, part of our strategy is really to have a balanced portfolio. So to the extent that we do add something in a riskier place, it'll probably have to be a better either mine or project or a better operator operating those, I would say, because that makes a huge difference in terms of its reception within the country and its ability to operate successfully. And so, I think we always do try to create a balance, and that goes with, projects as well, sort of balance out, current cash flow, near-term, mid-term growth, which we have, and then long-term optionality, which we also have. And I think, the one great thing about our portfolio today is that we are so well balanced and that we could add some, new projects or interests in projects or mines in different countries around the world without too much, impact on the rest of the portfolio.
Yeah, and are you at all tempted to get slightly out of your comfort zone? Because there's a lot of kind of thematics coming through in the market around net zero carbon initiatives, and we've seen lots of green royalty companies try and start up. And are you going to tip your hat towards any of that? Are you going to stick to the knitting and do what you know best?
I think the game plan for us is really to stick to our knitting. I mean, we certainly recognize that a lot of people have moved towards sort of the battery metals and toward the carbon credit type streaming and things like that. And frankly, that's not our expertise, and nor I think is that what our shareholders want. And so, I think there's some great opportunities for shareholders to look at other companies to do that. But, for us, I think trying to keep us as pure play in the gold space as possible is our primary goal, and something that obviously we do pretty well in.
Yeah, and you're happy with the rate of growth with your organic strategy. You're not toying with or looking at, because when we talk to people, it seems consolidation in the space is inevitable. We've talked about, your worst case scenario is someone comes and takes you guys out at a premium. Are you looking at some of these smaller players who are perhaps struggling either through being cash constrained or ability to, purchase for whatever reason?
Yeah, no, I think, we're looking at everything. And so, a lot of people come to us with new ideas about various things, and we come up obviously with our own ideas as well. And, for us, it's always a balance of risk return. I think everything that we do is, does this fit our strategy? And yes, no. And then what's the risk return here on the opportunity? And, for us, we would absolutely look at various corporate opportunities as well, in addition to, kind of one-off royalties or royalty portfolios. So we'll look at anything.
Right. Okay. And what about, again? So I look at your share price has been fairly erratic this year in a reflection of the what's going on in the market for sure. But if you were saying to investors outside of your industry and market guys, the institutional guys, if you're saying to people, this is how you should value us, this is how you should value a royalty company, what would you have people look at which differentiates you from the other royalty companies that come on and tell their story?
Yeah, and I think the one thing that differentiates us obviously is the ownership of the company. So that's obviously a huge part of it, as we talked about, sort of three large corporates and management that take up over 60% of the ownership. And so I think you've got a great group of people with a wide network to look at a variety of different things. But, the beautiful thing right now is our portfolio is really well balanced between, existing cash flow, near-term growth, and long-term optionality. And it's so diversified that no one asset makes up 10% of the value of the company. And so, given that, everything that's going on in the world, I think it is important to have a well-diversified portfolio. So I guess when I think about it, as an investor myself, I just think about it as being a great inflation hedge. If you want exposure to gold, particularly gold mining equities, which give you more leverage, I would say we're even better than that in the sense that, we aren't directly impacted by rising inflation, which is great for obviously shareholders. But the great thing is with a higher gold price comes again, additional capital sunk into the interest where we've got projects and exploration things in the background where we have a royalty. And as those move forward, extra value is created at no extra cost to Maverix shareholders. And that's exactly what we want. And that's exactly what you get with us. And you can sleep at night knowing that you've got a lot of groups that are well aligned with shareholders. And so I would think that would be a good combination.
So, just on that, because if given the kind of the nature of the market this year, you've got to have a view on what gold's going to do next year. And I'd love to hear what you've got to say, because I have no clue, because the normal rules seem to have gone out the window slightly, with gold price being where it is, and in relation to what was going on with the equities. So have you got a view? Has your company got a view on what 2022 holds for people investing in the gold market?
Yeah, you never know what's obviously going to happen in the next year or so. I don't think anyone would have predicted anything like the last few years we've had. But I will say that we are absolutely 100% bullish on gold price over the medium to long term. There's no question in our minds. If you look at the rate of money supply increases from all the governments around the world, you look at the uncertainty, and then you look at the fundamentals. You look at the valuation of these companies. So, going back to Maverix for a minute, I mean, if you look at our company, we're going to generate over 40 million of free cash flow next year. Our market cap is only $700 million. And plus we have all this growth to come in addition to that. And while you're waiting, you get paid a over 1% dividend yield. So, which is well in excess of anything you can get on a bank account. And the beautiful thing is it's inflation protected. And so I think you've got a lot of those right elements together, particularly in today's environment where I would say it's pretty frothy in most asset classes, except for gold equities.
It's interesting you say that, because when companies come on and talk about the dividend game, you've got to get the balance between the equity growth and the dividend game, because banging out 1% is better than nothing. But there will be industries like say coal, they'll be banging out dividends, but high single digit, in some cases low double digit type stuff. So your game's got to be more about showing the growth component and what you do with your cash that you're generating to continue to be able to prove up your ambition, as it were. So what will you be doing with this cash? Because if you're dishing out 1% dividends, it's clearly not giving all of it back to shareholders. You want to do something with it. You've got something in mind. So what is it?
Yeah, and I think the last couple deals that we've done since we last spoke in July are a good illustration of what we will be doing with it. One of the things we have focused on in the past year or so is to focus on areas where we've got a natural advantage over other competitors in the royalty space. And so we've done about $150 million worth of deals. So we've done a deal with Newmont, acquiring another royalty portfolio from them, a second portfolio of royalties from Pan American. And then in the past quarter or so, we've done a deal with Auramet, and then we've also done a deal with Polymetal. And the last two are probably the most interesting in the fact that those deals are adding immediate cash flow to Maverix. So if you look at the deal returns on both of those transactions, where we deployed just over $70 million, those generate 10% annual returns at today's spot prices. And so, doing a deal just to do a deal is not a great business model, but doing a deal in excess of your cost of capital is always a great thing to do when you balance off the risk as well. And I think you can look for more of that from Maverix going forward. So I wouldn't imagine too much change there.
I mean, did it surprise you being able to do deals like that in this market? Because producers are making money. Well, most of them are. And it seems. Why are they coming to you for money?
And I think it goes back to the, where you have a natural advantage. So I can speak with all those 4 transactions. We had pre-existing relationships with each one of those counterparties. We've done deals with all of them before. And, especially on the case with, Auramet, we've actually purchased royalties from them before. And we've actually tried to team up on a few things as well in the past. We haven't gotten anything across the line successfully in conjunction with them, but we've really formalized that relationship with the transaction that we've done recently, where we basically gave them $50 million up front, and we'll be getting 5,000 GEOs a year. We're paying an ongoing cost of 16% of the spot gold price, but it's illustrative of the types of things that we're doing, is that we're working with people to make everyone better off. And I think that's a great illustration of that. And things where 1 + 1 in terms of teamwork, you can get more than 2.
Yeah, interesting. I'm just wondering about the in markets like this, what's happening with the cost of money for miners in terms of their access to debt products. Obviously, no one wants to be raising equity in markets like this, so you become more appealing, I guess, as an option. Are you? Well, can you give some sort of insight as to some of the things that the miners are battling against or nervous of, which makes them come to companies like you for the cash instead?
Yeah, well, I think for one, royalties and streams have become more mainstream in terms of one component of financing, in addition to equity and debt. But obviously, with the equity prices in the gold space being severely under pressure, I'd say over the past year or so, it has made doing that much more expensive than it was a year and a half ago. And I think, because of that, I think the great thing about particularly how the way Maverix is set up is that, we do have the ability to help people out when they're in need, just given our existing cash flow base and our ability to do basically anything, whether it's cash flow generative or some project that's going to be coming in down the road. And I think the great thing for the counterparty, so the operator, is that they get current capital without really diluting their shareholders to an extreme level. And again, we'll work with the operator to figure out the right mix of cost of capital, and we'll hopefully get 1 + 1 = more than 2.
That's the name of the game. Ryan, look, good to catch up with you. Say it was, it's been since July. A nice sort of summary of the year, and obviously a look towards what you hope to be able to do in 2022. So in terms of revenue, we will stay in touch, follow you very closely. In one of the standout royalty companies in the space, doing things the right way. So stay in touch. Let us know how you get on. Okay.
Excellent. Well, thanks a lot, and we'll chat soon.